All right, everyone, welcome back for another Sunday night video of Carnivore Trades. It is December 29th, 2024. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel, and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, getting to the levels this week here. We're looking at the Qs right now. Let's flip over to the SPX, though. I'm going to keep it real simple. 6,000. So that's the big level that I'm watching here. And if we get above that, I think we should push to new all-time highs. That's kind of where the dealers were sitting. We'll sell a lot of ES orders there, right around 60.60 on Friday. After that kind of rebound, we had a nice kind of round trip type session on Friday. But you can see here, that's the trend line that got rejected. Right there, 50% retrace, and nice bounce off of that level. We are technically still in the Santa rally period. Just because we have a red day doesn't mean that the market is going to crash or anything. But it was definitely a good attack from bears. But still, we have the weekly higher lows. And again, the NASDAQ, which I showed you a minute ago, is still leading the charge. Higher lows, higher lows, higher lows the whole way up. S&P closed above the 50 moving average. Got to give the bulls a bias here. Where those levels start to change. Again, I'd be remiss if I didn't point out the head and shoulders. I guarantee you every YouTube channel is going to be talking about this, and people are going to want to short because of that. Maybe it plays out, but these patterns have a high failure rate, and they do so for a reason, because they're very easy to see, and retail tends to like them a lot. A lot of people jump in, and they end up being liquidity grabs. So big level here, just removing that for right now. It's still 58.50. All right, so a break of that does probably put us into some negative gamma, and just gets us a lower low and a lower high on the chart, right? So that's very simple. Where would we go down to? Right around 57.25. 58.70 is kind of like the last area before 58.50. So that's something to watch there. Those are kind of your max downside right now. Those are your downside projections here. Shy of that, there is still a little bit of interest at 590 for earlier next week. That's dealer interest. If we gap up Sunday night or into Monday morning, I don't think we're getting anywhere close to that. I think this will end up just being another liquidity grab, and this bottom will look like every other bottom, right? Down move, steep retest, right? Down move, sharp retest, down move, sharp retest, down move, pierce of the low, right? And then just a breakaway. Again, still in the Santa rally. So just be aware of that. But to me, 6K is a level on SPX that's really the king right now. QQQ, a little bit of weakness into 515 if it gets challenged. If not, 530 is coming up. We got to get above 525 first. But we get above 525, we should go to 530, and then I still think 540 is like max move for right now. So those are levels we're watching there on the Qs. For IWM, nothing's changed. There's still maybe a little bit early weakness to 220. The resistance doesn't change though. 225. You got to get through that. If you do, this can squeeze. We're talking 230, 235 potentially. All right, so we'll be watching this area. So that still level is the master area. I want you guys to pay attention to this though. It'll tell us if the market is gonna go one way or the other though, I think. So let me just get rid of this. I'll put it back on in a second. We're inside of a channel here, right? And half of you are going to be like, okay, that's fine. Half of you are going to be like, Aaron, you're doing it wrong. So here, now everybody's happy because it's art, right? It's technical analysis is art. Nothing to say that this isn't valid too. But the important thing here is move high, lower, low, lower high, lower low, higher low, lower low, lower low, lower high. What's changed right here? We didn't get down to this low trend line. Every single one of these hits, whether we made a higher high or a lower high, resulted in a lower low, right? So now what are we doing? We're hammering on where? 250, right? 250, 252. If we break through 250 with conviction, I'm going to give the bulls a bias in the whole market, right? Semis is, they're a leading indicator for a reason. Always pay attention. I'll give it the upside bias to 260. That happens, I don't see the market breaking down. NVIDIA, got to cover it. 140, right, to 150. Through 130, then, it starts to get a little tricky and we could be going down. But Watch the semis. I think they're telling us something here. But sellers are starting to get exhausted. It's starting to curl up here. AMD, weakest semiconductor, right? Almost, Intel doesn't even count as a stock anymore. We don't even count. So weakest semiconductor, right? Outside of Intel. Green on Friday, right? Green. Hughes down 2% at one point intraday. AMD green. Maybe tax loss selling starting to abate a little bit. Watch this for a January effect play through 130. I like it maybe up to 137, 130, 140. So keep an eye on AMD here. Another sector I'm not really involved. I have a small position in this junk company here. It's just like a squeeze play, a January effect play. But TAN, solar, maybe some tax loss selling coming out here too. Watch this for January effect over the next couple of weeks. I think solar is interesting. I mean, what's it going to do? Go down to $30? What else is new? But, if it squeezes, who knows? Maybe it goes up to 40 and then retest this trend line here. So, again, just idea there. Last one. I'm not going to stop pimping XLE, guys. Tax loss, which is funny because it's up for the year. But it looks like capitulation here. Double bottom. Could be a January effect. What happens when money comes out of tech, guys? If you're bearish, what happens when money comes out of tech? That's right, goes into energy typically. Look at the performance 2022, right, versus XLK, right? And I continue to see data like this over and over and over again. You guys know, what do I do here? I follow dealers. That's what I do. Hedge funds are net short for the first time since when? Oh, that's right. Since literally the 2020 low. They capitulated right before the election, right before the bull run. And guess who's long? Dealers. Banks. You tell me. Anyway, you guys know I like energy. Double bottom here in XLE, XOP, OIH. I think these are setting up, specifically XLE, for a massive breakout trend leg. Look at the consolidation here for years. Consolidation leads to what? Expansion. Look at oil here. Weekly. Bollinger Band width. We're getting expansion here. Soon. I would love a dump in oil to buy a fake like liquidity grab. We'll see if that becomes the thing. But I like XLE as a January effect. Keep an eye on this too. Bottom line, 6K XPX. And, I'm just going to say 58.70, start getting into trouble on the downside. 58.50 is where it starts to get, bears can start to get some traction. So anyways, guys, I'll wrap it up here. Again, you guys take care. Have a great week, and I'll see you guys all on Monday.